All right, welcome to session number 35 of FinTree AMA. Today we have Radha with us. Radha, thank you very much for doing this. And also, thank you very much for recruiting people from us. Can we start with a small introduction of yours?
Sure. So I'm Radha Gupta. I'm the COO for the India office of Jupiter Wealth Advisors. So we are a wealth management company. We look after ultra high net worth and high net worth individuals, family offices, and a couple of institutional clients. That's our client footprint. We are headquartered out of DIFC in Dubai. In fourth quarter last year, like I was telling Utkarsh, we set up our office in India, in Pune. So the idea behind this office is to set up a research center, that investment advisory research center that is centralized.
So Pune is going to be the research base.
Yes.
For the global operations or?
Yeah, so our client footprint is all across the world, really, predominantly Middle East, Africa, Switzerland. These are the big markets. We also have clients in other parts of the world, in Europe, UK, Singapore, as well. So the relationship managers, the client-facing staff are pretty much all around the world. And the idea is to centralize some of the input that goes into their work.
Very interesting. Okay.
So all the macro research, portfolio reviews, product ideas, these kind of work, which doesn't require a client-facing profile. We are trying to centralize it out of Pune.
Okay.
And we've got some good talent here. Thanks.
No, thank you very much. We're very happy.
FinTree.
I think everyone who's pursuing CFA, FRM wants a research role, right? So we were very happy when we heard what kind of roles you're recruiting for. So let's start with basics. I have a lot of questions on the ultra HNI segment you mentioned, but we'll start with you first. Can we start with your educational background? What did you study? And probably if you can take us through your career journey in a brief in terms of what you've done.
So I'm originally from Mumbai. I did my BCom from Narsi Monji in Mumbai. And then for my master's, I came to Pune. I'm an alumni of Symbiosis. That's where I met my husband as well. And then it's soon after my graduation, I worked in Mumbai for a couple of years. And soon after, we ended up moving to Dubai. And that's where I think I started with Deutsche Bank in Dubai, in the asset management division. So asset management is a very straitjacket sort of industry. It's very rule bound, and we had a lot of institutional clients, sovereign wealth funds, pension funds, those sort of clients.
Were these assets, sorry, I'm interrupting, were those assets located across Middle East regions, or they were?
To begin with, so Deutsche Bank's asset management arm was just setting up an office in Dubai. So I was one of the founding employees there. And the ambition was to set up a Sharia compliant range, which is tailor-made for the Middle East region for Islamic investors. So we achieved that. It grew really well. And my boss at the time was promoted to Singapore, and he asked me if I would like to go there as for a regional role. That's how we ended up moving to Singapore.
Okay.
So in Singapore.
Sorry, before you go there, what was your role in the business at that point? Were you directly involved in asset management, or?
I was. It was a very small team. So there are of course the fund managers. I wasn't part of the fund managers team, but I was always in the COO silo.
Okay.
So it was setting up the range of funds. So it was what is the market need, translating that into a product.
Very interesting.
Finding the right people, right processes around it, and getting the right approvals from regulators. So there's some element of regulatory interaction, and then setting up pre and post client servicing processes as well.
Sure.
So it was.
So this was for how many years?
3 years in Dubai.
3 years.
3 years in Dubai.
And then after Dubai, you shifted to Singapore.
I moved to Singapore. So Singapore, of course, is at the time, at least. Now I think they're comparable, but at the time Singapore was a much bigger financial center compared to Dubai. It was pretty much the headquarters for South Asia region for most banks. All the banks in Singapore are the offices are within a 1 kilometer radius from each other, so it's a very vibrant environment. So I was looking after North Asia was headquartered out of Hong Kong. And I was looking after North and South. The kind of products in Singapore, of course, there was a.
This was again asset management business?
This was an asset management.
But different entity?
Yeah, different branch of the bank.
Okay, same, but Deutsche Bank again?
Deutsche Bank,
okay.
Yeah. So there was the retail funds, which asset management is a manufacturer of those funds, and they're distributed through wealth managers and other banks, retail banks as well. Then there was institutional business, which catered mainly to sovereign wealth funds, pension funds were some of the big institutional clients, and very few corporate clients, but mainly it was institutional clients. So.
And again, you were on the operations CEO type of role?
I was always in the COO function. So I was the CEO for the region.
Okay.
For asset management. So having done that for a few years, at the time, FinTech was a big buzzword. This was back in 2016.
Probably still is.
There were, so Singapore was really the epicenter of all of it back then for this region, for the emerging markets region, definitely. There were a few developments that were really exciting at the time. One was the innovation around blockchain.
Yeah.
Right? So blockchain had just come up at the time, and there was, of course, when you hear of blockchain, you're thinking crypto and you're thinking speculative investing. Yeah. But what really was exciting about that innovation was it allowed people to think that if currency as a concept can be decentralized, what else can we think of as decentralized, right? Do we need a central bank which is doing settlement for banks at the end of the day? Do we need exchanges? Do we need credit rating agencies? Can all these functions really be decentralized? That was one, I would say, exciting innovation. And then the other was this platform effect. So Uber had come up. So if you are able to create a platform where you are connecting someone looking for a ride to someone who is driving to work and has a free space in his car, if you can connect these people, what else can you do with this concept, right? So can you connect someone, a lender to a borrower? Can you connect someone looking for an equity raise to someone looking to invest? So there were just so many possibilities. So that is something I wanted to try. I got out of traditional banking and got into FinTech. So I joined, I was one of the founding employees for a payments company. So we did cross-border payments. It was called Singex, headquartered out of Singapore.
This was out of Singapore itself again.
Singapore, yeah. So the basic concept behind the platform was that if you have someone who is sending, say, $100 from Singapore to Hong Kong, and there is another guy in Hong Kong who wants to send $100 from Hong Kong to Singapore, can we match those flows such that the money doesn't actually have to cross borders?
Okay.
And you pay the Hong Kong guy's receiver out of your Singapore bank account, and you pay the Singapore guy's receiver out of your bank account in Hong Kong. If you have pools of money in both places,
so that is, you save on the translation.
The money doesn't need to physically cross borders. Right. You don't have any FX loss. You don't have any transaction costs apart from maintaining the platform itself, of course. That was the broad thought around it. And
I think we do the same in India. We call it Hawala.
It is Hawala, but licensed above the board Hawala.
Sure.
It is the same concept, yes. Yeah.
Okay, got it. So you worked there for how many years?
So I I worked there for 6 years.
Six years, okay.
It's doing really well. I had to move to India. I set up the Singex office in India as well.
Okay.
We set up Singex is, of course, a different kind of financial services. It's not investment. We set up a center.
So is that still operational? If I, for example, if I have to make a transfer, let's say to someone in Singapore, can I use their services today from Myanmar to Singapore?
It's not licensed in India.
Right.
But it's licensed out of Singapore, Hong Kong, Australia,
right.
The Asian region.
And the main difference of that platform vis-a-vis, let's say someone like a PayPal maybe would be that I save on the conversion cost.
Yeah.
So it's more cost efficient.
Yes.
Right. But then you have to sit on inventory of cash across every location. So there is a cost involved with opportunity cost of that money as well.
So the money is invested. The pool of money, there is a full-fledged treasury department which is forecasting how much money am I expecting out. After a while, you get a sense of what your
transaction
outflows are going to be, and you maintain at the most like a day's worth of cash.
Understood.
And you transfer it multiple times in the day then, and it's more complex than it seems initially, but it's doing really well now.
And then you decided to.
Then now, since Q4 last year, Jupiter set up its India office. So Jupiter, I just gave you a background. So we are wealth management. Asset management is the the manufacturing arm. Wealth management is the distribution of this whole business. So it was a easy enough transition, so we are a fast growing company.
Do you have, can I ask, how big is the assets under advisory at the moment in Indian business?
So we are not, again, licensed in India.
Okay.
This business
so your licensing is in Middle East, Dubai.
Yeah.
But you're servicing clients.
Switzerland.
Okay.
We are servicing clients out of these two jurisdictions pretty much globally. You can cover.
Sure.
But outside of India.
But do you also have Indian clients based out of India?
Not at the moment. It's something we are looking at. Maybe coming year, we are looking at a SEBI license. And the thing is, the Indian wealth management space is quite crowded as it is. It requires very deep pockets to compete with some of these big names that are already there, who have an army of relationship managers in all, not just the metros of India, but also the smaller cities of India.
Also very competitive on pricing.
Not a high margin. Yeah, it is not a very high margin business as well. So we are looking at a SEBI license, but looking at it more opportunistically. We have clients in Middle East, and many of them have some India nexus. So looking at those opportunistically rather than having a widespread presence in India.
Sure. Now a few questions. Since a lot of the audience would be listening to us are students looking for opportunities in finance. What you said out of this, I'm sure a lot of people are thinking, Dubai mein job kaise milega? Right? Because sitting here in India, हम लोग वही सोचते हैं Dubai apply कर लो, probably alone in dirhams. How is the Dubai market right now, since you are closely associated, and is it easy for someone who's in India to apply for jobs in finance in Dubai?
I would say both Singapore and Dubai. Firstly, I think globally in a lot of developed markets, there is a big, you would have seen the news, anti-immigration.
Yeah, that's true. What do they call it there? Emiratization? What is it? What is it?
There is so Dubai is kind of an outlier. There is still a large portion of, the locals are a minority in Dubai. The expats are a huge component of the total population. Singapore, yes, there definitely the government has put a lot of onus on, you have to demonstrate that you have looked at candidates who are locals, you have interviewed them, and only because you've not been able to
So if
find,
there's a lack of skill, then
you've
maybe
gone
they'll
outside
recruit,
and
right?
got an expat, right? So so it's getting definitely more and more difficult as a fresher to go there.
Yeah, Singapore, I understand, because I don't think we've had cases where people applied from India, got jobs in Singapore that easy. But how about Dubai? Is the market still good enough? Because I think the market size is expanding. There are a lot of products there.
Dubai, DIFC has been quite a phenomenon since it's been, I think it's about 15, 16 years that DIFC was established as a financial free zone in Dubai. Abu Dhabi has a similar free zone. It's called ADGM.
ADGM, okay.
Yeah. So both of them, you can see they're thriving. In Dubai DIFC alone, there are 100 plus external asset managers. That not all of them are going for a, some of them are just serving a single family or one or two families money. So they are not really looking at that scale of operations the way we are, but still quite a crowded market. But a lot of them are now rethinking. It is an expensive city. It is an expensive base. DIFC, it's to have a base there, you need to have people there. You need to have a certain office space there, and it's literally in the heart of the city. It's like having real estate space in South Mumbai, right?
Yeah, true.
It's not cheap. So a lot of them are looking at an offshore option as well.
Right. So you're saying
private banking, it's of course easier to go there once you have built certain experience behind you, and rather than go.
So you said something interesting. You're saying a lot of Dubai-based businesses are thinking of setting offshore entities in India.
Yeah.
Which I think yours is an offshore entity of sorts.
Yes.
It's a relatively new trend, right? Because I haven't heard we've had a lot of offshore European and US entities in India.
Yeah. Till a few years ago, doing business in Dubai was not this expensive. I think it is a relatively recent trend. Singapore, Hong Kong have always been much more expensive.
Yeah.
Dubai, I think, has caught up with it now in the last few years.
So which means I can stay in India, work with a Dubai firm. But do you think me going to Dubai, chances are a little less now considering all these situations, or there are still opportunities in finance?
There are still opportunities for sure. They say there are new millionaires being born in Dubai, created in Dubai every day, right?
Or migrating.
Migrating, moving there, base there, and getting golden visas there, and new businesses being created. It still has that advantage of tax angle. It's still in a world where nobody else is taking immigrants. Dubai is still
accepting
them with open arms. So a lot of things going for it as a destination. So
sure. So वैसे ही उम्मीद पे ही दुनिया कायम है, मिलेगा जॉब कभी ना कभी. Okay, so you said your right now your entity is focused on ultra HNI and HNI segment. Can you define what that means? I mean, because it's a very vague term, different banks have different definitions. What is your firm's definition of HNI and ultra HNI?
So the minimum portfolio size for our firm is $1 million.
Million USD.
Having said that, a lot of the private banks, if you go to UBS, Bank of Singapore, Credit Suisse, these sort of banks, the RMs don't necessarily have a high touch engagement with a person who is bringing $1 million.
True.
They are focused on,
because they have other larger ticket size clients as well.
We also have larger ticket sizes. Our family office mandates are typically between 25 to 250 million.
25 to 250 million.
Yeah.
Okay.
But our model is that we want to keep high touch engagement. No account should be considered too small, and that is the endeavor. And I think we are sticking to it so far. So the endeavor is that no account should be considered too small. And even we pride ourselves in being able to provide high touch engagement even to the smaller accounts.
Very interesting. Good. And I think this is a concern because I also deal with a lot of family offices. And now what's happening in India is I've seen people setting family offices with 5 million type of net worth, right? 40, 50 crores. We have family offices now. But obviously the level of engagement they get from consultants is very different than what probably 1,000 crore family office will get. So this is useful.
Yeah. So that was one of the concepts is compared to a private bank, the ratio we want of investment advisors and investment specialists to the RMs. RMs are the client-facing people, the relationship managers. So we want to maintain that ratio, and that's where this India entity is turning out to be really helpful. It's allowing us to maintain that high ratio of investment people.
So rather a typical investor in India who's probably not high worth, our investments are focused on mutual funds. Maybe if we make a little bit more, we can do PMSs, but it kind of stops there, or AIF, right? But you deal with a lot of these ultra high net worth individuals. How are their requirements different than probably a retail investor in terms of, and give us a few incidents, no names, but if you can give us some interesting incidents of kind of demands that you've heard, which you thought were very different than the usual.
So, so the first thing is we don't cater to clients in India. India, there are a lot more restrictions on what you can do with your money. When we are talking to a client in Middle East, Africa, Europe, typically he's looking at a benchmark like a MSCI World Index, right? Which it tends to be heavy on US and the developed markets. There will be some allocation to emerging markets. Having said that, the way I think back in the 1990s, when this firms like Ameritrade came along, or Charles Schwab, you know, you could execute trades on your phone, on your laptop at the time. There were no phones at the time, but laptops you could execute trades, right? A lot of people ask this question that what is a wealth manager really going to do now? So everyone has the whole internet at their fingertips. You can get whatever information you want about a stock or a bond, and it's at your fingertips. So what is the wealth manager going to do? But then wealth managers, at least the smart ones, they went a step further and they said, we are going to give you
more
portfolio advice. We are going to tell you about how to do asset allocation. Then I think in the early 2000s, there was this wave of robo-advisors which came along. So there were firms like Betterment and what was it?
In India, I think we have funds for India, plenty of robo-advisors. Right? So robo-advisor is basically like a algorithm that will ask you a bunch of questions and then correct me if I go wrong, and then recommend you how to invest. Right?
It will put you in a slot that you're low risk, moderate risk, high risk, and accordingly recommend a portfolio allocation to you. So again, there was speculation that is wealth management business dying with
I think that's an ongoing debate even in India today, because now we have regular funds and direct funds in India. So now we have AI. True.
After robo-advisory, wealth managers started saying, no, we are giving personalized advice.
Right.
We are not giving the same model portfolio for everyone. We are giving personalized advice. Now, AI is challenging that as well, that I can personalize, a machine can personalize research output for you. It can personalize your it can even do sentiment analysis, not just market analysis, but also sentiment analysis. So where is the wealth manager going to add his value, right? So I think where the wealth manager adds his value.
What's the answer? Good. We want to know.
While the smaller portfolios may well get automated, a lot of the ultra high net worth family offices kind of clients are increasingly looking at wealth managers to give them like a holistic advice. So they are not, we don't just advise on the portfolio. There's also a big wealth planning practice, estate management, succession planning, business succession continuity planning, corporate advisory, helping the family office on their real estate investments, setting up vehicles for them, tax planning for them. So being this one-stop shop for the large, that's where we see we really add value. And of course, there is a human element to it. You know, the markets are dynamic. So is your life. Your goals, your financial goals change with life, and you need that emotional support. Someone you rely on. Trust.
No, I agree 100% because
That's
even in
where-
India, I think there's an ongoing debate, right? Have you guys heard of direct plan versus the regular plan with mutual funds in India? So what I've heard from a lot of industry people is that direct plans, you don't have to pay trail commissions, right? Because your expense ratio is lower, but the money is not sticky.
Yeah.
And typically when the markets are in a negative mood, which they were for some time, a lot of withdrawals and redemptions start happening.
Yeah.
Right? And that is the time when you feel the need कि मैं किसी को phone करके पूछ लूं कि क्या करना है. I think that's where people
and
like
information age means you have a lot of information.
Probably little more than what we
need someone to refine it for you for what you are looking for. Someone who can guide you, connect you to the subject matter expert in that. There is a role for that. In terms of products itself, coming back to your original question, we do a lot of so of course equities, bonds are the vanilla products. We do a lot of structured products. Middle East is a unique market. There is no tax. People don't pay tax. So in a European market, for example, a client might want to see his portfolio grow mark to market, and he's happy seeing a notional increase in his portfolio. In Middle East, they want to see cash flows.
Profits.
They want to book profits. They want to see cash
Very
flows.
Interesting.
So FCNs, fixed coupon notes with underlying of equities are very common. They give a capital protection, and there's a fixed coupon that you earn of 12-13%. FX is a big product category for us. So FX overlays, what it does is you don't have to invest upfront a large component of your portfolio. You don't have to commit to it. You're just working on a margin.
Okay.
Can
you explain the first product now? It sounds very interesting. So you're saying, what did you say? FCN?
FCNs, fixed coupon notes.
Okay. So when the markets go up, I get the upside.
So typically they will be capital protected at the bottom, and there will be a strike price. So if I take a basket of stocks, so currently I think Europe is coming up as a story now. Germany has
fiscal
expanded its balance sheet, and German defense stocks, for example, if that's a theme, and you choose a basket of good quality European names in defense as the underline, and you wrap it in a note. The note gives you a fixed coupon of say 12%. So it's something, it's priced by a issuing bank typically. We don't take the risk on our balance sheet. It's usually by a bank. It will give a fixed coupon, and there will be a strike price. So if this stock falls by to say 80% of its current value, then you are forced to take delivery. So the worst case scenario is you have to take delivery of the stocks. In which case,
so a little bit like cash covered puts of sorts, right?
Yeah.
Very interesting. And if the markets go up, then do I participate on the upside?
No, then you just get the coupon.
So you get the coupon of 12%. Yeah. Okay. Very interesting. And then you're saying Dubai market offers a lot of these structured, because I don't think we have a lot of these products.
Can't do a lot.
Very few. Yeah.
So
we have a similar product, somewhat similar. We call it PPN, Principal Protected Note, which actually gives you a little upside of the markets but protects your downside.
Yeah.
Okay.
Similar concept.
Yeah. Any other interesting products you have, or anything that the clients have demanded? You're talking something about on the forex front on margin. How does that work?
Yeah, FX is generally so because there are no foreign exchange regulations outside of in India, of course, you are constrained by the FEMA regulations, but most of the banks, private. So when we advise clients, the actual assets are held with a custodian bank.
Right.
So we have partnership with various custodian banks, and those custodian banks will, based on your book, if you have a 20 million book with them, they will give some sort of loan against that.
Right,
and
like margin. Okay.
You leverage that portfolio to get a loan, right? So they also offer so FX products typically. What will be a popular is borrowing in a currency which has a low interest rate. Currently, that CHF, JPY are
CHF, JPY. So I borrow in JPY
and CHF and invest in a higher yielding, maybe a FCN with underlying in Japanese stocks.
Oh, very interesting. So, CFA students, what is this called? Good. Okay, very nice. So very interesting. I think a lot of these optionalities we don't really get to see in India, right? We hardly have any structured products, at least not in the retail space.
Yeah.
Very interesting.
Yeah.
Good.
India, derivatives are also quite strongly controlled, and FX, of course, is very, very tightly controlled. With the
so how do you see what's the future now? How do you see this whole wealth management industry doing probably next 5-10 years out? Because AI is just getting smarter, right? And it's getting very personalized. And the speed at which it's improving, maybe at some stage, the quality of advice through AI could be better than a human advisor. So how do you see this space going? Yeah,
definitely. I think one is all the good wealth managers are actively looking at AI-enabled tools to offer to their clients. I don't think it's a frill to offer anymore. It's pretty much considered a basic now. So
you're saying most of the wealth managers today are using AI-based platforms?
Yes. So we've tied up with a platform called Maestro. It's a Swiss company, Swiss-based company, which amongst it what it basically does, it pulls your holdings data from the custodian banks, and then overlays it with data from Bloomberg or Refinitiv and market data, basically, and gives you a lot of data-rich analytics. It slices and dices it in different ways, and it's customizable. And more and more, they are bringing in AI into that, which is personalizing it for you. So if you want to define your dashboard in a certain way, you can, and it allows you to do that. So I think personalization is a big trend.
But the whole idea of wealth management industry is personalization.
It is, yeah.
But you're saying now AI is also doing that increasingly well.
Tech-enabled personalization is one big trend. Yeah, the industry itself is the basic root of it is personal interaction. Right. I think building that interperson trust is the very basic. Being a holistic provider is also a big trend, which is finding the right partnerships. So finding people, even as a big bank, and more so as a smaller player such as us, it is not possible to be everything everywhere. So finding the right people. So for corporate banking in Africa, so if a client comes to us and says that I have a manufacturing plant in South Africa, I am getting old, my sons are not interested in running it anymore, can you help me sell this?
Right.
This is a typical corporate advisory service, which a normal wealth firm does not offer, but finding the right partners. So we have partners in Africa who help us with it. We have
so you have the whole ecosystem, right? So whatever your client needs, you have everything available.
Being able to position yourself as a one-stop shop is important.
Important, right?
Getting important now.
Can you give us a little bit on succession planning? Have you come across any interesting cases where, because are you, like, we see it in movies, right? Or television shows.
Succession.
People are fighting, and some wealth guy would come in and
Yeah.
say "Teko itna hi milega." Does it happen in practice? Have you come across any cases?
I personally haven't come across any live cases, but so we have a wealth planning, a head of wealth planning. I have a very good rapport with him. So he's told me some of, I think the biggest mistake people do is not starting early enough, not planning for it early enough.
Hmm.
There are
That's
lot
true.
of banks have, PwC has a family report or something it's called, which tells you some of the statistics are by the time wealth reaches the third generation, it loses its value significantly.
Yeah.
The transition from first to second generation is hard, and then second to third generation is even harder, and it loses a lot of its luster by the time it reaches the third generation. So wealth planning first is engage a planner early on in your life. Understand the implications, have a repository of all your assets, especially if your assets are across geographies. Each geography, like for us, some of our clients are in Islamic countries where there's Sharia law. Each country is going to have different laws around what determines succession.
So a lot of domain knowledge, right? For you to be able
Tax
to,
knowledge, then
estate laws and everything around it.
Then overlaying it with certain specific religious beliefs. Many Muslims will want succession to happen in the spirit of the Sharia law.
Right.
But you have to plan for it. If you, for example, want something to go to your daughters and not just your sons, you have to plan for it. For example, in your lifetime, if you gift it to a trust in the name of your daughter, then that's still considered in line with the religious beliefs. So, so there are ways to go around it. But the key to it is starting early, engaging the right partners, keeping a list, keeping it updated. Even if you have a will today, keeping it updated through your lifetime. So these are some of the key
Very
parts
interesting.
of it.
Okay. So Radha, you've been in India now for a few years, right? You said you moved before COVID.
Yes.
So I'm guessing 2019?
2019, yeah.
2019, okay. What's your view on fintech space in India? And do you see any opportunities where potential people like, these can build some interesting businesses?
Definitely. I think India is the place to try any consumer-facing fintech idea because of the sheer number of people you can reach when you're building a solution in India. So I think there are a lot of ideas.
Give us a top 2 or 3 if you're okay sharing. Anything that excites you, anything that you feel needs to be there in India but was there in Singapore or Dubai, that can be built.
I think lot of things, there is a constraint surely because of regulations. Our regulators in India are generally not very supportive on the whole crypto and blockchain angle. So
so crypto blockchain is, Geo has started doing something though.
I think
have they?
This now, what has happened is they've made this FIU as the registration body for any crypto exchanges, and now CoinDesk and I think Binance, some of the biggest crypto exchanges have registered with the FIU, which
it's an Indian regulator
in India. So which is saying that there's going to be a comeback. These global markets are looking to make a comeback to India. There has been some white paper that SEBI has worked on, but it's been languishing for, I think, a couple of years now. That they have worked on this white paper, but nobody has seen it yet. So there's been some chatter now that it's coming back. And
but apart from blockchain, do you see any other opportunity? Do you think private wealth, there can be some sort of a fintech?
Definitely. Private wealth, I think RegTech is a big space. Regulatory, technology that helps with compliance processes, KYC and KYB specifically are such a big pain point in all financial institutions across NBFCs.
So something
banks,
that helps
everything.
the regulators.
Something that
helps companies.
Companies, yeah.
Companies to comply with, right? Okay.
I think a lot of financial services institutions have been able to solve for seamless onboarding of an individual investor or an individual client. Seamless onboarding for a business is not something many people have solved for yet. It still requires, multiple UBOs, multiple directors, each has his own PAN and each has his own Aadhaar, and bringing that together in a seamless fashion, bringing that whole user journey together is not something most people have solved for. There is insurance tech is a big area. Insurance companies are looking for
better ways to distribute,
better ways to for everything, I think.
So insurance, regulatory, like these two spaces you like.
Wealth tech, of course, a lot of room to.
You think there's room in India in wealth tech now? Because we have Grow, we have Zerodha, we have plenty of global platforms, and then we've hundreds of banks. Everyone is trying to get a piece of that pie. Do you still think there's scope in India?
I think what Zerodha or Grow are solving for is that robo advisory space, which has a market, definitely.
Which is
it
for
works
masses.
For the mass affluent segment. There is also a room for being a human-led wealth firm where technology is a strong enabler.
Right.
It may not be a tech-led. You may not be able to advise family office, for example, completely over the internet. I don't think we are there yet. They want
so you're
human
saying
touch
tech-based, but people first.
People first, but with a strong technology enabler. Yeah.
Interesting.
There are banks, and then there are completely human-led family office offerings.
Right.
But I think there's still room for a player which is strong in technology and not a bank, but strong in technology. And I think there are a few well-funded, this 360 and all, Sequoia funded,
and all these guys.
Investing a lot in tech, but I think there's still work in progress.
Sure, very insightful. Okay. Now, final question on career, then I'll open questions for these guys. In wealth, you said two aspects, right? One is the people you've recruited from us, which is doing research for different projects. And then one is the client-facing roles. What kind of skill sets should one focus on? For example, let's say I want to be in client-facing roles 2 years, 3 years from now. What skills do I focus on along with my CFA FRM studies? Do you have anything that you specifically look for in these type of roles?
I think if your foundation is right, you're already a CFA, half the battle is won. I think then you're just looking at someone who's curious, keeps on reading, keeps on staying on top of what is there in the market, being able to, like I said, it's information age. You have a lot of information on the web, but being able to absorb it and make things out of it, and being able to apply it in a way that I'll give you an example. So some of the young people we've got from FinTree, they are already they first started working on portfolio reviews. So a simple portfolio review is we start with what is the market view. We then go to your specific, the client's portfolio, how it has performed in the last quarter, what we where the asset allocation is currently, what we see should be corrected in the next quarter, where we added value, where we didn't add, where we should do better. We identify those, and then we come up with product ideas. So that's so product ideas, of course, our CIO, who sits in Dubai, gives broad thematic views, and then the individual RM and the investment advisor will try and customize it for the client needs. So there is a lot of scope. A lot of the young people we have recruited from FinTree are coming up with ideas. They are contributing to the product ideas. Why don't we do this? So
you're saying connecting the dots and being able to interpret,
being
right?
curious, being well read. I think that's what you can do.
Okay.
Once your foundation is strong, there's a lot you can build on that.
And do we need a lot of interpersonal or communication skills, especially if I have to be in a client facing role? Is that like a top priority for a lot of these recruiters?
Yes and no. There are, I think there are both kinds of people in wealth management.
Okay.
I know there are some successful relationship managers who have built a strong client relationship just based on their interpersonal skills. They know everything about their client. They even know the birthdays of the client's kids. And there are those. And there are those who are very successful relationship managers who are very not extroverted, who read a lot, who are very impressive when the client meets them. They're very impressive in their world views and their economic views, market views, who can speak very intelligently, but they're not different personalities. So I think it's both. There's room for both kinds of personalities to thrive.
This is insightful, because I think our perception is that because in wealth management you have to meet clients, you have to be in good communication. But you're saying, if you're good with technical stuff, you can get away with.
And you can specialize in some things as well. Being a relationship manager is not the only role in wealth management. We have equity specialists, we have FX specialists. Our CIO is, of course, extremely well read. He's really good at technical analysis and fundamental analysis, both. And he's really good with his macro views. He really has the pulse on, this stagflation is hitting us, how this is going to impact.
So is he worried about what Trump might do on 2nd?
We've been working on it, I think, ever since January, since the new administration came into power. This last FOMC meeting, there was, of course, the forecast that FOMC put in place for inflation is higher. And I think growth is lower and unemployment is higher. So
and last night, I think the numbers came, right? So it turned out to be a little higher than what they forecasted.
Yesterday, the market fell because CPI numbers were higher than forecasted as well. So there are indications of stagflation coming towards us. Having said that, Federal Reserve is saying it's going to be transitory in nature. It's
they tend to say that
in second half of 2025, and it should not last. The thing about uncertainty is I don't think anyone is certain how this trade war is going to go, which way it's going to go, what is Trump's next move going to be. Nobody can guess it. It's just, he has just been so unpredictable in every possible way.
Right.
So let's see how.
So we'll see. All right. Okay, done. Any questions that you would like to ask, one at a time? And since we have only 2 mics here, I'll be repeating your question. So we'll start with you, sir.
Hi.
Recently cleared my CFA level 1. So pardon me if my question is a bit long. So predominantly all of us have been exposed to the Indian markets and maybe a little bit of US rather than you. But for example, I am very interested in the Japanese markets and the Japanese economy. So how does one get to understand their culture, their economy? Like, for example, I'm pretty sure you had to research a lot about the Sharia law in Dubai and also. How much do we need to understand the economy before working with those clients and that space? My question.
I'll quickly just repeat his question. So question basically was, he's sitting in India but wants to study Japanese markets. So how does one study Japanese markets sitting in India? Right? That's the question. Okay.
I think one good thing about the internet is you have information from all around the world. Do you need to be prepared in advance for every possible eventuality? Probably not. As long as you have the ability to assimilate quickly, So now Japanese market was quite a forgotten market for
quite some time.
For some time,
Yeah.
and now it's suddenly the macroeconomic indicators have made it attractive again. People are taking a renewed interest in Japan. Um, I think that's fine as long as you can pick up. You may not have followed it for the past so many years, but it's never too late to follow. I think reading a lot, and a lot of times we find it easier to listen to podcasts and talk to people about it. But this is completely my personal view. I think there's no option to reading. There's no alternative to doing some deep thinking, and reading is required, I feel. But that's completely my personal view. And I know it's also a generation thing. Younger people find it a lot easier to assimilate information by
Listening
hearing
or
and
watching, yeah.
conversations and watching. I think that's just, I think it's a personal thing, how I like to assimilate.
No, I agree
information.
100%. I think because your mind is working faster than the speed at which you're reading, basically you're thinking about what you're reading multiple times, you process it. But that's my personal
Yeah.
view.
But I have this conversation with my son. My son is 16, so he completely disagrees with me. He thinks it's an old way of thinking, that reading is the only way. I think you get a lot more when you're talking to people through conversations. You
Sure.
can pick up a lot more facts. So I think it's
It's
also
always a
generation.
combination of everything.
Yeah,
It doesn't have
yeah.
to be either or. Okay. All right. We'll take one more. Okay. Yes, Sarithya.
Is required when you're shifting from Indian work culture to foreign work.
Wow, great question. What kind of mindset shift is required when you're shifting from Indian work culture to maybe a Middle East or Singapore work culture?
I don't think a lot is required to change. I'll give you an example. I think it's being open to different cultures. And when I first moved to Singapore, so Deutsche Bank's asset management company, it was originally a Singaporean Chinese company, which was taken over by Deutsche Bank. So it was called Morgan Grenfell Asset Management, and it was bought by Deutsche Bank. So the original management in this asset management company were all Singaporean Chinese. It was completely Singaporean Chinese. And then Deutsche Bank took it over, and a whole bunch of white people were put on top, So there was, and then I moved there. I was the one and only brown person on that floor at the time. So when you're looking at it as a third person, you really see there is a race dynamic at play there. There is an us versus them dynamic that can happen there.
It happens.
It does happen. I think it's important to be open to take a step back and see it and address it and work towards it. It's if you dismiss it that, okay, this is not really happening, it's easy to do that. But if you really want to make a headway, you have to address it and move forward with it. It's not very difficult. Human beings are human beings everywhere. There are cultural differences. The Westerners tend to be more outspoken. Asian culture is more timid. It is a fact. And sometimes people who are louder in a meeting room make themselves heard, and people who are less, who are timid, don't make themselves heard, right? So it's important to bring it out that that I don't always say this in a meeting room, but this is how you can go after a meeting and say it. So you have to find your own way of working around it. That's what I would say.
Thank you. That's insightful. Who wants to go? Tisha, yes. Sure. Can I quickly repeat? By the way, all the candidates who are listening to us on YouTube, if you'd like to ask any questions, I see a couple of them from Smith. Keep on posting them in the comments. We'll try and address them soon. The question Tisha asked was, what are the challenges faced by HNIs in India vis-a-vis international? You mean the wealth advisor or the clients? Advisor. Okay.
I think something Utkarsh mentioned earlier that here the depth of products is quite limited. There are mutual funds, and then there are only so many blue chip stocks that you're working with, and then there are only so many quality mid-market stocks that you're working with. So the depth of products, I think by regulation, our regulator is, and rightly so, given the mix of
Population,
economic diversity that we have within our country, they tend to be more conservative, and they have a lot more stress on consumer protection rather than being a free market is not as important as protecting the small guys, right? That's the spirit of our regulations here. So the depth of products is limited, and in that it is increasingly becoming a crowded space. There are a lot of wealth advisors chasing that same wallet of the number of millionaires and billionaires that are there. But I think there are the number of the mass affluent segment and then technology enabled products. There
still
is
see a
room
scope?
for, there is the mass affluent segment.
we
There's
say-
a lot of upper middle class. It's a burgeoning section.
We say we have 140 crore people, but we really have 10 crore tax return being filed.
Yeah.
So technically the market size is not as big as what we think from outside when we look at population.
Yeah.
Right? It's relatively constrained. And then we already have a lot of competition in this space.
Yeah.
I'm personally quite optimistic though about wealth management in India. Because I feel the speed at which the HNI segment is increasing is exponential.
Absolutely.
Right? Because the kind of wealth which is created in India in the last 5-10 years with markets. So therefore, even though there's a lot of competition, I think the more efficient and skilled players will probably end up still doing well.
I agree with you. The ultra high net worth are looking for more out of the box solutions now. They have a lot invested in mutual funds.
Everyone has a PMS mutual fund now.
A lot of I think private equity plays are doing well. This pre-IPO sort of opportunities, everyone is chasing them. Everyone wants to get on a Zomato before a Zomato IPO. So this consumer products companies going IPO is a big story. Again, that is now, I think, become a little overkill. Too many of them. So I think they're looking at more out of the box.
So which is basically a regulatory outcome in a way, because if India had variety of structured products that probably Dubai market has, probably some part of that money would have flown in there. What Indians really have at this moment is you either do debt, which is not exciting. I mean, even within debt market, we just have plain vanilla. We don't have exotics, convertibles, any of those. And then otherwise I do equities, and then every fund manager comes and peddles the same story. So there's a lack of options, right? So what do you do with your money
so
then?
Much money locked in bank deposits here.
Yeah, it is. Okay. All right. Any other questions? Yes. Okay. Siddesh.
Sure.
Oh, great question. Let me just repeat that. In case if I want to get into wealth management industry, is CFA enough or do I need MBA? Okay, fantastic.
So we have just started this journey of recruitment in India, and so far we've been very happy with the CFAs we've got. I think if your basic understanding of how to approach an investment, if your basic concepts are sound, all that is left, like I said, is having a curious mind, and you have to be a voracious reader, and you can, I think that's sufficient as a building block.
To someone who's probably learned proper finance through CFA, you think that's good enough? MBA is not a necessary condition. Okay, fantastic. Thank you very much for that answer. I think we'll go to Namesh. Yes.
Next, please. From a security perspective, what are the common security after that investor can go over?
Sorry, can you come back again?
Especially the growing trend in UPI and digital payments. Interesting security concerns that investors can go over.
Do you mean investors or UPI is
In
mass-
payments, in digital payments, you're asking?
Okay, his question is what are the security lapses that especially in digital payments that people tend to overlook? Okay.
Digital payments, I think UPI has been a runaway success. So I think the original OG pioneer in this was Alipay in China. I think
Is it?
it was couple of 2 to 3 or 4 years before UPI, where
Oh, I didn't know that. Okay.
yeah, they completely changed. China, like India, was not a market which had a very high card penetration.
Okay.
So similarly in India, we didn't have very high card penetration. So
it was all cash.
it was all cash, and it was ripe for disrupting because the evolution of this QR code completely changed. You all you need is a mobile phone. You can forget your wallet at home, but
Yeah.
now you can't forget your mobile
Yeah,
phone
true.
at home, right?
A lot of people travel just with phones these days, and I've personally stopped carrying wallet for the last couple of years
Yeah.
now. But are there any lapses in the system? Anything that you feel is better elsewhere else? Does anyone have a better payment system than India today?
So so Europe for a long time had very fragmented payment systems. Right? Each country had its own legacy system. So Bank of France ran its own system. The central bank in Belgium ran its own system. So there was Europe for a long time did not have eurozone wide payment system. And I'm sorry, this doesn't answer your question at all. We are digressing. But so US card players, Visa and MasterCard, took a lion's share, 90% plus market share of all merchant payments in Europe.
Okay.
Right. So European Union has made several attempts, but they didn't work out of doing a eurozone payment system. It was just too complex. So many old legacy 30-40-year-old systems having to migrate to something new. It was just a Herculean task. So their original ambition, so it's called EPI, European Payment Initiative. EPI's original ambition was to have a eurozone wide card network.
Card
network. But now, if you see, they've launched a product called Wero, WERO, which is they are moving to QR code based.
So is it a central bank thing or it's a commercial product?
It's association of banks in Europe which have come together, and it's now got a lot of political backing because European leaders, especially with the Trump administration coming for a second term, the first term that they were there, the European Payment Initiative took off in Trump's first term because he did not support the embargo on Iran at the time, right? So that's when they realized that we need to have more independence on our financial decisions in the country because
you can't trust it, which
if
is
the
feeling
American
now.
big tech doesn't support it, they don't have the independence to enforce it in their country. So Europe is now, they are in pilot testing phase for Wero, so which is going to
be similar to how UPI similar?
Yeah, account to account transfer and QR code based merchant payments. It's not 100% fail proof QR code payments. The simple way of committing a fraud is I show my QR code in a vendor establishment or merchant establishment.
We've seen those reels.
Money goes into my bank account. So that's but if you're going to a trusted QR code, I think it's pretty safe.
All right. One more question here, then we go to YouTube. Couple of questions to wrap it up. Okay, yes, sir.
So it's a basic question. There can't be space for if an individual wants to build a client base other than from India, from outside, for example, East or European,
So what is the major process for initial starter, like a company? He has experience and all, but he doesn't have experience with foreign clients. So how will he build the client base for such particular?
So you're saying you want to set up a wealth management boutique out of India, but serve global clients?
Mhm.
Okay. How does one do that is the question.
It is a bit of chicken and egg in case if you're looking from an employment point of view, right? When you go to a large bank outside of India and say, I want to start off in private banking, they will say, do you have a
Bring
book
clients.
of clients? Do you have a book of clients? And how do you get that book of clients if you haven't worked? So it is a bit of chicken and egg. But out of here, I would say a good starting point is working with one of the wealth management offices like ours, or a lot of the PMS AIF companies in India are now looking after AI. What is it called? And money.
Do you mean Gift City?
No, yeah, Gift City as well, but I don't think Gift City has any wealth managers onshore. It's just one token person sitting in Gandhinagar. But
it's more a feeder fund.
Yeah. So a lot of PMS AIF managers, this LRS money that goes out, they started offering some international exposure for the LRS. I mean, a PMS like a Marcellus, for example, they have a team of people who, because they have a captive audience of people who are counting on them for managing their India portfolio, something adjacent that they have outside, they help them with that as well. So it's not a book as large as the India book, of course. It's a smaller book, but there are PMS players like that which have started offering.
I have actually a follow-up question that I've long wondered. In my experience in private wealth space, or even wealth management in general, if I'm a relationship manager or client-facing role, let's say I work in Pune for 5 years, I build a book. Now, for some reason, I want to move from Pune to, let's say, Kolkata. I've seen it's very difficult because my existing relationships are here. So it means once I commit to a city, it's impossible for me to move out. Is that true?
It is. I mean, that is the nature of, I will tell you, wealth management is such a relationship-driven business. We have. I have a very good friend in Jupiter, one of our clients. This relationship manager, he goes on holidays with his top client. It's that, and literally that client considers him like a son. So it's that level of trust that a good RM eventually builds with a client over years, right? So so this client's son couldn't make it to the holiday, and he asked the RM to join him. And literally, it's
was it a fancy holiday?
It was in Europe. So he went and on his own expense, and but really that's the kind of relationship every RM wants to cultivate eventually. So being able to have that proximity and FaceTime is important.
So you can't, basically it's very tough to move, right?
Yeah.
Otherwise you're starting from zero again.
It's not easy. It is possible in theory, but I've not seen it be very successful in real life.
So which means if someone is starting career, then right at the beginning of their career in this space, especially if it's a client-facing role, they have to be very cognizant of what geography they decide to work in.
Yeah.
If someone chooses Mumbai...
Like I said, there are various roles, there are various specialist roles. Everyone in wealth management is not a relationship manager. There are people who have relationship
So if you
skills,
move other aspects, you can move.
Advisors, there are investment advisors, is a completely mobile role. You can be anywhere, and you can be a market expert in equities, you can be a market expert in FX, you can be a structurer of notes, you can be good at many other parts of the investment process.
Good. Curious guy on YouTube is asking, going on holiday with client, is it a violation of ethics?
At his personal expense.
At his personal expense, okay. Is starting a career at SEBI RI office a good idea? SEBI RI office. Yeah, I mean, so what do you think? Someone is asking SEBI RI office. I'm guessing he wants to work with the regulator. Is that a good idea?
Work with the regulator?
Looks like that. I mean, it says SEBI RI. I think it means SEBI registered RI. So he's starting a career with a RI, a good idea in India.
Yeah, definitely.
It's a good idea, right?
Definitely. Yeah,
Okay.
yeah. So RIA license is the basic license for the wealth managers
Yeah.
in India. So
Okay. Sayam is asking, how can a newcomer in finance leverage AI for a competitive edge? What is the first mover advantage exists in adopting new financial technology? This is a great question. I mean, see, everyone is. These days I'm rereading this book by Mustafa Suleiman. Have you read this?
no, I haven't.
Yeah, it's basically AI. It's this guy was heading Microsoft AI business for a while, and it's a little scary book. Every time I read this, डर लगता है कि 5 साल के बाद नौकरी रहेगा नहीं रहेगा. It's very scary. And what can we do now? The careers are so uncertain, right? Because a lot of things that humans do today, very easily AIs can automate them. I spoke to a lot of even large investment banks. I spoke to some guys. They said, "You have a bunch of people doing copy paste work. Why not just do an AI?" And they said because AI can do it at 99% accuracy today, and that's not good enough for regulatory compliance.
Yeah.
So the moment we move that 99 to 100, a lot of these
We're
jobs are
going that
gone.
way,
We're
yeah.
going there. So what can I do? How do I protect myself, especially in finance? How do I protect my jobs? What skills should I look for right now?
I think yeah, AI is definitely the quality of AI computing is going to get better. It is where it is today. It is going to get better, and it hopefully also gets cheaper. Right now, it is you know OpenAI spent 500 million on the AI model. Now DeepSeek is already spent a lot less. So hopefully the cost of AI also
And the
goes
technology
down,
will
and
also democratize over a period of time.
It will
right?
democratize.
But then
Looking at
how do I survive? What skills should I learn so that, because I feel wealth management is one space where I'm still protected because my job is very relationship based, which AI probably will not replicate. But what else can I work on? Should I learn AI now? Should I learn coding?
I guess for the next generation, maybe not this, but probably a generation after this, it is going to be like being able to work with technology is going to be like being able to speak in English. It is definitely not going to be a extracurricular skill anymore. It is going to be a basic.
Yeah,
You have to be able to work with. So even large banks. So JP Morgan has its. So Jamie Dimon is very bullish on AI, right? He was very pessimistic about blockchain technology. He was never a big supporter, but JP Morgan is a big believer in AI, and he has said in the future employees of JP Morgan are only going to work 3.5 days a week. That's his vision. So there is a chatbot like ChatGPT. JP Morgan has developed its own version of it, its own AI model, and that's available to the analysts on the floor. And what work was being done by a junior analyst on the trading floor is now being done by a bot.
Chatbot.
So, I think there are going to be job losses for sure. What we can do is, of course, there's always going to be a layer of human. I think EQ is going to be a big skill set, a very valued skill set. Being emotionally intelligent, being able to navigate human relationships is going to get much more important than it is today.
Sure. I mean, that scares me more than helps me because I get it. EQ is important, but see, I mean, think from someone who's probably 19-year-old now.
Yeah.
There's so much of uncertainty in terms of careers because there's absolutely no idea of what path do I choose and what path will, because even for doctors now, robos are doing fantastic surgeries, right? It's happening across the board.
Yeah.
So
I think the people who are 19, 20 today are still, I think the next few years is going to still be a build out phase of AI. You know,
so by the time they come out in the market,
doctor training a AI module to be a full-fledged doctor, you know, you need a lot of expert doctors to train that AI model first. Maybe 20 years, 15 years later, there's going to be a phase where, you know, what do the human doctors do now? Yeah. But I think the next generation, I think for this generation, it's still going to be a AI build out phase where a lot of human expertise is going to be needed to train the AI model first.
So you're saying we are protected at least for 10, 20 years. Okay. All right. I think, okay, this is a good one. This is coming from Smith Johnson, who's asking, when performing financial analysis for an asset management company, what performance or efficiency metrics can one focus on?
Okay, so let me understand that. So asset management business is a very rule-based business. So when you have a fund, the fund prospectus pretty much puts very hard guardrails on what you can and can't do. It's from consumer protection point of view. Even institutional mandates, right? Like if a pension fund is giving you 300 million to manage,
There'll come a lot of rules.
Very strict guardrails that you can't go beyond 15% in one single position. Total for this sector can't be more than this percent. So it will be very, very strict guidelines. And a lot of the research on asset management side is very different from wealth management side, because wealth management, it's very greenfield, and everything in the world is okay if your client says he's okay with it, right? Asset management tends to be very regimented in that sense. So research folks in asset management are a lot more, they'll do a lot of company visits, understand the fundamentals, look at the fundamentals, financial statements of the company, speak to the management of the company. A lot of time is spent on those kind of activities. Whereas in wealth management, wealth managers will usually take third-party research. Nobody will spend time on talking to the management of Reliance to understand the prospects of Reliance.
That's not their job. They're not research analysts.
They'll say, okay, this is our theme. What is the best product we can do to support this theme? If our theme is stagflation, and if we feel like during stagflation, consumer staples are going to do well, then what are the products we can build around consumer staples or healthcare?
Okay.
It's a very different orientation for analysts in asset management and analysts in wealth management.
One final question, Radha, before we let you go. I've heard that some of the wealth managers for ultra HNI segment also cater to their weird demands. I've heard wealth managers also help clients for shopping trips. I've heard it helps them with luxury purchases, watches or bags or all the fancy stuff. Is that true, or?
It is. So we have a partner. We offer concierge services to our top few clients, and we have a partner who provides that. It is all co-share above the board, and there's no hanky-panky in that. It's all part of the offering, that anything to do with large amounts of money that is going in and out of your account, we are there to handhold you. That's the message to the clients. So even if it's
so if I need like an African tiger, can I order that on the concierge service? No,
not got that before. Not got that request before. But smaller things like a yacht booking, private jets, these kind of things.
So all those services are also provided. Right. This has been a fantastic conversation, Radha. I think I learned a lot. I think for me, the key learning point, which I never thought before in this conversation, was when you said because there are no taxes in Dubai, income tax, therefore clients are more inclined to book their profits, right? So they're looking at cash flows, not mark to market. And I never thought of that before, but that's very interesting insight. So thank you very much for sharing. We had great conversation.
Same here. Thank you for having me.
And all the audience on YouTube, if you have any questions that we couldn't answer in this session, you can post them in the comments. Then we'll try and answer them in the next session. So with this, thank you very much.